Hi and welcome to the Market Alert for Tuesday the 18th of August 2020. So the S&P fails to make new record high as Buffett's Barrick bid pumps precious metals. You see there, I love gold. As I've said before, precious metals are going to be the highest returning sector for a very long time to come as the financial system continues to fall apart, and in particular as we go into the autumn. So as it says here that the S&P failed to make new highs, as the Dow has also done of late, because the market is still quiet. But that quiet, don't be deceived by it. Once the market has these resting phases, consolidation, once they break out, the volatility returns with some vengeance, as we will see going forward. It's as simple as that. I was hoping that it would kick off a bit more this week, but yesterday, as we saw the open, we did get the volatility. If I just move through here, you can see prices moving sharply to the upside, and I thought, fantastic, we're off to the races. And prices did move initially, you can see there. Then we had the selling coming into the market. They then moved back down again. You can see that you've got the buying here, you've got the selling coming back in to bring the market back down to the DP. And I thought, great, we've got the usual open where the market has the volatility, and then what happens is you get into a nice trend out of the whipsaw of the first part of the session. But this didn't happen. We had all of the volatility, as you can see here, and prices spiking back up, and I thought we're off to the races with this. But then all of a sudden the market went into its sideways phase, which you can see here as the price bars narrow in range, and eventually you'll see we end up with a sell signal. And then prices do move lower from this, and I thought, great, all we need to do now is to take out the big round number, the psychological level, the DP, the 200, and head down towards the close. But that wasn't to be the case, because as soon as we got to the DP and the 200 bar moving average, and again, this is why it's so important to read the prices on a bar by bar basis, you will see that the pros buy back at this level. You see the green bar there inside of the red. And it's at this point decided to get out of the trades, as you'll see in just a moment, because prices, once they start to find support at this level, it's very difficult to break, particularly if the market is quiet. And from this point, we see prices trading sideways and start moving in a range. We've got a bit more buying coming in there. It's low, but still picking up at the BRN there. And then prices come back, have another look at the DP and the 200, get a spike in volume. Prices come off the low, close back above the 200 bar moving average, and then we have a potential buy signal. So the market's come down and tested the DP level and seems happy at this point that the selling has disappeared. So what we're looking for here now is the market to trade back up to towards this high. However, the market has a different opinion as the trade is filled, and then everything is fine with, just quiet sideways. We're holding above the 5 bar moving average and the 20 bar, heading back towards the entry price, and then all of a sudden the market decides to have another shakeout. Now again, you can see before I complete this bar that the volume is very high and prices have come off the low. So let's complete the bar, and there you can see back to the BRN with prices sitting just below it, but then there's enough for the market to move back to the upside. So what you've got here is the classic shakeout of those that have got stops, and that included us, unfortunately. There's a case for having the stop below here, which I appreciate, but normally we don't get this. We've got the BRN in place there to protect us, but it just went straight through. The shakeout happening there just comes along now and again. Just want to test to see if anybody is too close, or let's get rid of these shorts before we move the market back to the upside. However, the upside didn't really materialize after this, and we then get another short. And again, we've got to take out this major support area now that we've seen has been tested here, and tested here, where the buying has returned to the market. So prices fill, and immediately we see them buy back again. Even though it's small, they're still holding the market at this level, and that's precisely what they do, and that's all that's required. As soon as you see these green bars after the shorts or during a short, you know that there's some form of buying coming back into the market or profit taking on the short side. So prices then start to move higher. We do have some selling pressure here as the market tries to take out the stop, which was good, and I thought we may have seen a reversal with price, from here closing back below the 5, the 20, and then having a go, and then breaking through again to the previous day's close, and also down to here where we'd seen the market find support before. But that wasn't to be the case, as prices came back and then filled on the buy side just before the close there, but managed to trade up to the scalp, and that's where the market stopped. And you can see here this point where the volume increases and the market closes lower there is where the market stopped trading and then traded in the sideways range. The afternoon, if we just move forward, you'll see prices were already short. This was an interesting bar that came back here. Prices traded up to the BRN, very high volume, and then once it closed back below the 20 bar and the 5 bar, having breached it, prices then continued to the downside. Now you see the profit taking by the shorts here, but this bar closes back below the 5 bar moving average. So even though some have taken profits, there are others that have come in and then moved the market lower. Prices trade down to the 200 MA and then find some support before eventually breaking back below the 200 MA, which you'll see in just a moment, and also the 5 bar moving average there, and then continue lower until again you see the green bar coming in, a bit of profit taking there, and then you get another green bar where you can see the shorts taking profits in the trade as well. The volume is high at this level, and then you'll see prices being brought back. And again, you'll see these as a catalyst. All you've got to look for is the market closing back above the 5 bar moving average there. And then prices basically just traded sideways, not a big range at all. And I'm going to show you exactly why this is going on at the moment. But as I say, hang in there, because it will change, and when it does change, it's fantastic. So let's just have a look at why, and you have to look at the Dow for this. You can see the daily chart of the Dow. Prices have been sideways now for the last 1, 2, 3, 4, 5 days. And of course, today isn't going to help because we've got no news for today as well. So it's no news Tuesday. All of the news factored into the market as well from the weekend during yesterday's trading session as well. So let's have a look at the overnight for the DAX, and we can see that it's fairly quiet. I have actually compressed all of the price bars, but let's just wind back and have a look, see what's going on. I'm going to redo this so we can see where we are. And prices opened above the DP and the 200 bar moving average, traded up to the high of yesterday, and you can see that it was met with some selling there. Prices have moved lower. They're trading below the DP and the 200 bar moving average at the moment. The daily pivot, that is DP, prices below this at the moment. Very, very narrow range. So there may be an argument for standing aside, which is not a big deal, because if you are not trading, you are still making money if you are not having those losing trades. It is Tuesday. The news, there's no news. All the news from the weekend has been factored in, as I say. So, and we've got the Dow in that sideways range as well. So it may be just a case of let's see what happens at the open, what the volatility is like, and then making a decision to keep the gunpowder dry. However, that said, if the volatility kicks off nicely, then I will still continue to trade. You just have to take a view as the market unfolds. But it's just some guidance there, really, because this happens during the month of August. But when I looked at the Dow and saw that we've had 5 bars or 5 days of the market sideways, then there's no surprise really that we're not getting the momentum of volatility at the moment. And all we have to do is just come back here and have a look here as well, and you can see that this is the implied volatility is dropping. But as I say, hang in there. The good news is when it breaks, you get absolutely fantastic trades as the market starts to break out and that momentum builds. And you're going to get that as we get through this month, and then into September, October, November is going to be wild because of the US election. Plus the furlough ends. It's just going to be carnage. And this is the calm before the storm. So well worth being patient for and waiting for. I mean, in particular, in the earlier part of when we started with the COVID, it was fantastic. It was just like taking sweets off a baby. But then we don't want too much volatility because the spread betting firms then have this habit of widening the spreads, which works against us. So we just want a moderate amount of volatility, the sort that you see in these areas here where it peaks. That's the sort of volatility you want. You don't want this, because even though it's great here, the spread bettors don't like it, and they will widen the spreads against those who are trading it, because it's so easy to actually make the money because of the speed that prices are moving. You can get the stop to break even in no time, and they're not fans of it, let's put it that way. Let's have a look at a few other things as well. So that's the volatility. Again, you can see from the color-coded one, green to the downside there as well. So let's just have a look at a couple of other things. Let's start off a quick look at the daily chart for the DAX as well. Again, you can see that yesterday was really quite an inside bar on Fridays, which means that it was inside the high and the low of the previous day. So that indicates how quiet it is. Price is sitting at the 62%, 12897. It's got to get back above that 62% here, which is close to the psychological level of 13,000 as well, but quiet there again, as you can see. Meanwhile, in the metals markets, the US dollar is moving lower, and we're just about to take out the recent low. The US dollar is losing value. A dollar in 1971 would buy you a dollar's worth of goods. Now it's in the region of 2 to 4 cents is what a 1971 dollar is worth, and you're seeing this inside of this, where you've got the US dollar is devaluing, and this is why I'm talking about the carnage that's coming later on in the year. Let me just get rid of the volume there. So again, you can see at the moment we're okay. It's when we take out the 87 level and then we start heading down here. That's when we get the big moves coming inside of the metals as well. So the dollar on the daily chart is about to take out the 92.51. I say about to take it out. I don't know whether it will. We saw support here, but it'll be the third time the markets come down to have a look and see where the shorts took profits and brought the market back. So let's have a look, see how the metals are performing. We'll just look at the silver market. So after last week's shakeout, that was the last time you're going to see $24 in silver, and the market in response to the dollar weakness overnight is now moving back. There will be some potential weakness as the market moves higher from this high to this low. I can draw these in. 78 will be the next one at $28.50 if you round this up to the psychological level. And silver likes psychological levels, oddly enough. It as I say, it struggled for the last few days at $26, and yesterday was the last time to actually buy in at $26. If we just move back on the 5-minute chart, and you'll see this happening yesterday as just looking for the 26 level. There you go, the red line there. That was the last time and the last opportunity at $26. And again, you can see them coming back in. And the reason is this goes back to 2011 when silver broke 26 to the downside. So it was so important that they held $26 in the new bull market. And it came back to this area quite a few times. If you look at the 4-hour chart, you'll see there that's going to be the $26 level, if I'm correct, and it certainly is. So yeah, you can see how it came back a few times, and then it's now moved to the upside. Sorry, I think that's right, isn't it? It's $26. Yep, that's absolutely right. So yeah, silver marching back to those highs as well. And what was interesting, the manipulation of the silver market, they tried to they sold over 2 billion ounces of silver over the last week, trying to force prices down so the shorts could, those that are taking delivery, could buy cheaper, but unfortunately it failed. And now it's not going to be long before you see the market taking out the $29 a level again, or $30 for the big round number for this market. Okay, that will do it for this one. I did take the opportunity to add more to the positions as well, as you can see there, during the pullback. And again, it's just a matter of the markets heading to the upside. And now we've re-established this trend I'll buy as the market pulls back in the smaller time frames as well. Okay, that's it for this one. If there is anything else to report, I'll let you know. But otherwise, as ever, thanks for watching. See you in the next one.